All right, so I'm really excited again to introduce you to the Gartley methodology of trading. We are always seeking out tools that work. Make no mistake, this is something advanced because it has to do with the ABCD pattern. So for you to understand Gartley, let's talk about the ABCD pattern. All right, there's always a pattern of trading. This is a point X from where the trend starts. Okay. And I want to make it as simple as possible. The trend starts from point X. I'm trying to see if I can just put on the spotlight. Okay. So just let's just get right into it. So there's a point X. The trend goes upwards. Now, because the trend is going upwards, that's why it's called a bullish Gartley. It gets to the point A. Now, from point A, it reverses, gets to point B, then moves up again to point C, and then reverses again and gets to what we call point D. You can see point D is circled here. Now, the Gartley pattern is a bullish or bearish. It can be bullish, it can be bearish. It's a bullish or bearish ABCD pattern consisting of 4 consecutive price moves. When you spot a Gartley, it's usually a sign that the prevailing trend is about to continue. So remember, there's a trend direction and there are reversals. Now, the Gartley pattern triggering is telling you point D is the point where the original trend is about to continue. That's the first thing I want you to get. So in a bullish Gartley, the significant move is from X up to point A. So look at this. This is a bullish Gartley, right? The trend starts from here. Point X is the point at which the trend starts building. Then the trend goes and gets to a point A. Then it starts reversing. Maybe hit a resistance point here. Then it starts reversing. Then it gets to point B and then it pumps up again. Now, people would think, oh, it's about to pump up and start pumping backwards, like the same direction. No, point C, it's on that resistance point. It starts facing down until it gets to point D. Usually, because this is point D, what it means is when you see that Gartley sign come up on your screen and tells you to watch point D, what it simply means is that at that point D, this upward trend is going to continue. Do you get it? All right, that is for bullish Gartley. And you can watch it several times. So remember, there's point X. The point that you want to pay attention to is point D. But before it gets to point D, it's going to have a big move, then resistance, then C. So just know that there's A, B, C, and D. D is the point you want to buy on for bullish Gartley. Bullish. Now, I'm just trying to help you to remember, what bullish looks like the M sign. When it's M, standing, that's bullish. So you can use that. So point X, remember, is the point at which the trend begins and it hits resistance at point A, then it reverses. All right, then this. Now, at point D, this trend that is bullish here is ready to continue. That's the point. Now, when you see this sign of like the W, that's the bearish Gartley. So this is point X, where the bearish trend begins. And then you see there's a big move. It gets to point A. Then it meets support. It moves up. Point B, it meets resistance. It goes to point C, meets support. Then it goes up at point D. When the Gartley tells you that this is the point D, for a bearish Gartley, is telling you the trend that started from X to A that went opposite is about to continue downwards. So I need you to understand that when you see Gartley pattern appear on your screen, it means the prevailing trend is about to continue. I want to demystify the Gartley for you. Now, what is the prevailing trend? It is the trend that started from point X to point A. In the bullish Gartley, this is it. In the bearish Gartley, this is it. All right. In the bullish Gartley, the significant move is from X up to A. Reverses at, that's all that we've said. Bearish Gartley patterns are opposite A, just the same thing we said. All right. This is just what we described here in written form. And this is clear enough. Gartley pattern means at point D, the original prevailing trend is about to resume. We're going to apply this in our trades. We're going to look at different options and different combinations. But that's the basics. Now, how to trade the Gartley pattern. Now, a Gartley is usually a sign that the original trend from X to A is about to resume. Please don't forget that this is what it means. Now, when the pattern completes, the market should reverse once more at point D, marking the end of the retracement. So here's this. Now, if you look at this, this is a W sign, which means it's a bearish Gartley, because the significant trend was this way, right? The significant trend was downwards. Then it reversed. So A, B, C, D. Now, you might be getting confused a lot when you think, you might want to call here A. No, here's not A. All right, here is X. Fibonacci levels. Okay, if you were to do this Gartley process manually, you would need to draw Fibonacci lines, observe the 61.8% point, 78.6% point, confirm. There are so many rules to, so that is why the Gartley doesn't appear on every chart. Because you check it sometimes on a chart, it doesn't appear. Then on some other coins, it will appear. The reason is because there are a couple of technicalities involved in determining that the Gartley pattern has triggered from the Fibonacci levels that are matching the legs. So the legs must match with a certain Fibonacci level. But we don't want to complicate your understanding of the Gartley with all those details. So look at Arbitrium. This is a 1 hour chart of Arbitrium. All right. Now you see a Gartley sign. Okay. We can make this chart more complicated, but just imagine this is X. Just call this X. Okay. Now from X, it went to A. So here's A. So this is a bullish Gartley. Remember, it has a shape of M, right? So it's the bullish Gartley. Okay. So okay, I just adjusted my chart and it's appeared fully. Oh, wow. Okay, so this thing needs you to adjust your chart, make your chart smaller sometimes. Okay, so this is it drew this from here. This is the A. This is X, all right? All these X points. Now you drew it up here. And what you have here is A. So at point A, which is coinciding with this liquidity level, which if we're going to draw our horizontal lines, we would have put it at point A if it's a 4-hour chart. Okay? As one major support level. Now, at point A, it hits and started coming downwards. Now, this is point B. Here, point B. Now, when it hits point B, it's going to point C. Now, this is point D. Because from C, it's expected to come to points. Now, what you need to know, based on what I've explained, is that once it gets to this point, we have to go bullish on Arbitrium. So remember my least performing coin method, which I did a month ago, I triggered a position here, which might dip until it gets here. That's fine, before it now begins to move upwards. But if you wait and time your entry here, you could as well take a good 8%, because this is the noise area here. You take a very good 8%, 10%, and you could even it could even go as high as 22%. Okay, because the trend that went here, came back here, went here, is about to resume. Okay, but let's not be greedy. You can just take your 5% and walk away, or just somewhere here. All right, walk away. This is the bullish Gartley. That's all there is to it. But you see, remember, when it's the shape of M, it's the bullish. The trend that is going on is from here, it's coming down, it's about to continue. This tool has done all the calculations, has factored everything together to say this is how it's going to happen. Okay, remember, there's nothing that is 100% guaranteed. There's no indicator that is 100% guaranteed. But I can tell you that if you want to enter this trade, you can decide to time it till it gets to this liquidity level before you enter. So if you're going to trade Gartley method, here's what I'm going to suggest you do. Use the HTF liquidity method, your Gartley, and with support and resistance. Those will help you. You don't have to even bother about MACD so much, but you can, because it's going to tolerate a lot of movements in between, okay? But you're trying to enter at points where you can maximize the business. So get it. It's very important. This is the bullish Gartley. Now, if you open the settings, actually, I use the default settings here. If you open the Gartley indicator, I can decide to this green label with a lot of numbers here, I can decide to take it off and uncheck it. Once I uncheck it, the Gartley position appears better. So I can see that there's both bullish and bearish Gartley here. So, I don't know why there are two boxes there. So whatever it is, this point is a point where you could buy and make some good money. So if I want to get curious, I could go to my 4-hour chart and draw. Oh my God, there's also Gartley here. Oh boy. Arbitrium is on the way up. On the way up. Okay. So this is a good one. Now, this looks like a bearish Gartley. Okay. This looks like there are two things here now, making it look somehow. But this looks like a bearish Gartley. Let me see. Let me add the label again so that we can be sure. Let me drag this down. Okay, Gartley down sell. Okay, cool. So remember, the M looks like a bullish Gartley. This is bullish Gartley, so the trend is upwards. So it's trying to tell you now that, okay, at this point, be ready to sell. Okay, so it's all probability. Even if you trigger here, it's telling you you can target here. All right. So, but you don't have to be greedy. Remember your support and resistance, which is, just time yourself properly. So that's the whole idea. This one's very clear. The M is very clear. This is really not too clear, but you can see it's clear from here, telling you down sell. Okay, while this one is telling you up buy. So this is bullish Gartley, and this is obviously a bearish Gartley. A lot of calculations have gone into this thing. So bottom line is that there's a downward trend. And what's the downward trend? Let me zoom in a little bit so we can see better. Because for it to be bearish, remember there was a downward trend. So I'm trying to get this shape. This is going to be difficult on your phone, okay? So there was a downward trend. One, this is A. Let me see if I can get this right. This is B. This is C. And now this is D. And it's telling you at point D, I'm continuing my downward trend this same way that I came in. So I was going down here and I reversed here. So at this point, it's telling me I need to continue my downward trend. So you see, you have to balance. It's showing you both positions as possible positions. So when you're trading, and you need to pay attention because this is the 4-hour chart. So it's telling you something really powerful here. All right. So this is, let me try zooming again so you get it. So X is somewhere up here and it's zoomed down to A. Then this is B. All right. And this is C. And this is D. So the main trend was coming down. It's telling you I will continue my downward trend. The next time the price reaches here. That's the Gartley method. Now, you might decide to say you enter a buy here, it's going to hit here. Okay, I always tell people to determine your take profits, look at the last thing that happened on the left. So if you enter here, don't be greedy. Just look at where did the price hover around? Where was there a lot of noise? There was a lot of noise here, here. Just take your profits at that point. Walk away. There'll be many other trades for you to fire. Okay. Remember it says, so even if you enter here and it starts trading, the moment you get here, you go into one shot because you've already gotten this warning here that if it hits this line, it's going to continue downwards. Okay, so the bearish and bullish Gartley on the 4-hour chart have appeared. So they are probable, there are probable points of, change in direction. Okay, continuation of a downtrend and continuation of the uptrend. So when Gartley appears, that's what you need to know. All right, and I hope that helps. This is just like a perfect example of having both Gartley charts on the 4-hour time frame. But on the 1-hour time frame, you see, this is what you get. Okay, you're only seeing the bullish Gartley. That's all we're seeing here. We're only seeing the bullish Gartley. But the higher time frame is telling you whatever you trigger here, remember there's something happening on the bigger picture, which is warning you not to go too high. Just take your profit here and get out. All right, so I hope that makes sense to you. Now let's look at some other examples. I know that I saw Gartley on some coins. So let's go look at those coins. Was it XRP? Did I see Gartley on XRP? Yes. So look at this Gartley. It has appeared. And what shape does it have? M. So this is bullish Gartley. All right, if I'm correct. So this is X. This is point X. If I'm going to start putting alphabets and all of that here. So let me just try and get, let's say this is point X. I'm going to make it bold. I'm going to make it larger. So you see that's point X. Then I'm going to make this here to be A. I'm just trying to make it more exciting. So that's point A. All right, and this here is point B. Just want to make it clearer. All right. There is point B. And here is point C. So you need to understand the ABCD methodology. All right. And of course, here is D. If you want to hide this thing, just go to the Gartley indicator, remove the labels, and then automatically you see the sign of this is the D now. Here where you have this, you can decide to put it there. So that's it. So at this point, whatever the prevailing trend was from X continues. All right, now it's going to go up. So let's for the sake of history and checking back, I'm going to put D here. All right, I'm going to put a D here because we're going to check back on this some other time and say, did this really happen? And so at point D, we could say we are facing up. And where are we facing up to? I like to face up to the last noisy region, which is here. This will give me a good 10%. Pay attention to XRP because there'll be money to be made in XRP in the coming hours. All right. So that's how the Gartley formation helps you. Right? This mark will likely come down here. How much down it will come, whether it will exactly come here or close by, I don't know. Okay, but whenever it's here, I can decide to combine it with my Lorentzian classification, turn on my Lorentzian classification. If I see my Lorentzian classification at any point, tell me to head up here. Once I see this D, this is another way to trade Gartley. Okay, another way to trade Gartley. So we said this is A, point A, right? And it's still heading down. Now, this is point B. The moment we've seen point B and I see this arrow pointing up, I know that, okay, point C. See point C, you were not sure how far to go. But then this is point D. Now, if I see this sign again, anywhere here after point D, or anywhere from here, I'm going to enter a trade. So using your Lorentzian classification, arrows along with the positioning of the Gartley points, you can go into your trades with full chests. Okay, very, very important. So after the movement, after the trend, all the activities. So let's go to the next. That's XRP on 1 hour. But remember, always look at it from 4-hour time frame. So let's look at which other one did I see Gartley on? Is it excellent? Okay, so permit me to just click through. I don't know if it's XTZ. I'm gonna just all right, good. So here we have ICP. Okay, so what kind of Gartley is this now? It looks like the M Gartley. It looks like the, yeah. So sometimes before you see the Gartley shape, you might need to move your cursor around, zoom in a little bit on your chart. So this is point X. Let's just do this again for the sake of, you know, this is point X. This is high level stuff for trading. This is point A. Not everybody can do this, honestly. Not everybody would like to do this. But I'm going to ask you guys for a favor soon. This is point A. Now let's go take points. You know, I slowed down on talking about this Gartley because I didn't know how to start explaining these technical things. This is B, right? But here we are. We have no choice but to take the bull by the horn. This is B. And here we have C, right? Remember, it doesn't have to be too accurate. I'm just trying to estimate. Then, of course, here's D. So, I mean, we're on recording on this. So let me just keep this next to this. This is D. The Gartley indicator is telling you that at this point, you're going to have an upward movement for ICP. So let's take note of these things. And I'm going to draw my support and resistance on the 4-hour chart now for ICP. And you see, it's telling me that there's Gartley here too. All right. There's Gartley on this level. And it's telling me something crazy is right up here. Okay. Something crazy is right up here. For you to get a full Gartley shape, you know, you have to toggle between the visibility levels. So let's do this. So this is bearish Gartley. So that means we're not seeing this fully here because I've not really properly zoomed in. But if I zoom in properly, maybe it will appear fully. So there was a downtrend. Okay, I don't want to waste too much of our time. There was a downtrend, and there was different movements, but here's the D, which means that the direction downwards will continue. So you need to get away. For me, use the liquidity levels and get away before you get here. Very, very important. Excuse me. Very, very important. All right, so I came to the 4-hour chart not to draw Gartley, but to draw my support and resistance line. So let's see. What can we draw here? This is a peak here. Yeah. Then this looks like another good one. And this looks like a good one too. Okay. Now this looks like another good one. So many points here. I don't want to draw so many points because the goal of this discussion is not support and resistance, but using the Gartley tool, right? Okay, so yeah. So this is the 4-hour chart. We go back to 1-hour chart. And here you see why it's all probability. So here we have the here we have the yeah. Here we have the bullish Gartley. So I just want to make it easier for you because not everyone. I'm going to hide the Lorentzian classification. I'm going to what else am I hiding? Okay. So looks simple. Looks simpler now, right? So expect this to drop. I don't know if it's going to drop. It's likely going to blow past its first support level. Yeah, it might bounce up a little bit and then come down, touch here. Now, I don't know if it's going to touch here and start going up or if it's going to come down here. But for me, I can place a buy order here because it's telling me buy up. So once, for ICP, once the price comes here and touches here, either here or here. Remember, you are trading with margin call, so you're good to go. I'm just going to come in here. Even if it's here, I'll just take this trade in. All right. Because it's bullish. Honestly, I can just take it to here. 15%. Wow, that's a lot. So I could just take it to, yeah, 6%. 6 to 10%, your choice. I'm just trying to look at the noisy areas here. All right, so you can decide to make it here, walk away with 6, 7%, or take it here, 8%, or the next noisy at 10%. I wouldn't want to be too greedy to likely get here and go beyond, but just for studying and testing, that is how you can enter your Gartley. One more thing, if you want to go to the weekly charts, you can, and see if there's a Gartley formation, because a Gartley formation forming on the weekly charts is going to be crazy. Also, you can check the daily charts. Okay, Gartley will appear if some conditions are met. Okay, so but a 4-hour Gartley like this one is a good signal warning you that even if you're going higher and you want to be greedy, just stop at these liquidity levels. Just stop at 20%. All right, just stop at 20% and get out of the trade. Okay, or stay just right where these heights are. Just, yeah, that's what Gartley is. So let's monitor and see how it goes. Thank you very much for listening. That is how we use the Gartley indicator.